Gold prices staged a strong counter-trend rally on Tuesday. Despite the release of robust U.S. employment data, spot gold remained completely unaffected and instead climbed sharply throughout the session. It ultimately rose by $17.71 to close at $4,208.14, successfully holding above the key $4,200 level with a quite resilient performance. Analysts stated that there are two core drivers behind this counter-trend surge in gold prices. First, market expectations for a Federal Reserve rate cut remain firm. Second, the sharp rally in silver has driven gold to follow suit. Additionally, U.S. President Trump's latest remarks on tariffs have brought some volatility to the market, which deserves attention. Let's first look at the strong employment data. The U.S. Bureau of Labor Statistics (BLS) announced on Tuesday that U.S. labor demand unexpectedly increased in October, with job openings rising from 758 million to 767 million, which was higher than the market expectation of 715 million. However, it should be noted that this strong employment report failed to change market expectations for a Federal Reserve rate cut in December. Instead, gold prices took the opportunity to resume their upward trend and directly surged above $4,200. Another key point to mention: spotted silver experienced a sharp spike on Tuesday, surging 4.3% to close at $60.65. This strong performance of silver has directly driven the entire precious metals sector higher, and gold has naturally benefited, making its upward trend more stable. On the evening of Tuesday, U.S. local time, President Trump also made remarks on tariffs. He said he might consider reducing tariffs on some U.S. goods, but at the same time reaffirmed that the practice of imposing extensive import taxes is helping the United States attract investment and revitalizing long-struggling industries such as automobiles and chips manufacturing. As soon as these remarks were made, the market responded slightly, and attention should be paid to their impact on the subsequent market trends. According to interest rate expectations data from Capital Edge, even after the release of the strong U.S. employment data on Tuesday, market expectations for a Federal Reserve rate cut on Wednesday remained unchanged at 88%. It is evident that the market is convinced that the Federal Reserve will definitely cut interest rates this time. The market has basically confirmed that the Federal Reserve will cut interest rates this week, and attention has now shifted to next year's policy signals. Wednesday's economic agenda is extremely important, including the Federal Reserve's monetary policy decisions, Fed Chair Powell's press conference, and the update of the Summary of Economic Projections (SEP). These contents are likely to indicate the direction of monetary policy in 2026, which will have a significant impact on the long-term trend of gold prices and must be closely watched. Disclaimer: all the above content is for reference only and does not constitute any investment advice. Any trading decisions made based on this information are at your own risk of profit or loss. Want to receive real-time interpretations of the Federal Reserve's interest rate decision and gold price trends as soon as possible? Subscribe now, give a like, and share with your investment friends around you. Subsequent analyses will be delivered to you in real time. Thanks for watching.